Hi everyone, ladies and guys. So bottom line is, hope everybody's having a really good Father's Day. I'm gonna do my quick rundown on my markets here. So bottom line is what I'm seeing in these markets. On the timing wise, I'm looking for a potential swing low on this move down, Tuesday or Wednesday of this week. Okay, and we do have Powell speaking Wednesday, giving testimony in front of Congress. So, we could still see some flat, maybe slightly lower action here in these markets. But I do want to float that idea going on here. I do want to point out, I personally think we could very easily have the lows in from Thursday. Thursday lows could be fairly secure here. And I'm not saying that we can't look down below even for a little bit further, but I do want to float this idea. This is Andrew's pitchfork. We are bouncing off that Andrew's pitchfork right below a major trend line. Sometimes that can mean a overshoot and potentially trap the bears in the short positions. So be aware of that situation of what we're going on here. I'm actually looking for a possible back test of this dotted dash line here, a trend line. We came down, gap down below, and it would not surprise me, and that could get us as high as 38.30, 38.50, to back test even that gap. 38.35 is the gap. So, keep that in mind as a potential this week. That is the scenario that I'm thinking is going to play out this week. So, just keep that in the back of your minds in your trading. Okay, quick rundown on our moving averages. We are below on the daily. We're below our 150-day moving average. Okay, and we are still quite a ways above our 200-day moving average. So keep that in mind. I'm going to flip this over to the weekly time frame here. I think these are far more important. Okay, now this is the 150 weekly SMA. Okay, guys. So this is the 200 week moving average right here. Okay, so basically we have broken the COVID lows on our trend. So keep that in mind. Is this just a look below? Keep in mind at this, these COVID lows were buyable points in the past. But, I have no idea what this actually, technically could mean going forward here. Is this a support area? It very well possibly could be a consolidation support area that we just sniffed below going into the first of next week. So last week on my video, I was talking about the potential of us coming down, breaking well beyond our market maker moves for last week, which that proved to be the case. So we hit two standard deviation moves on the S&Ps and the uh, uh, IWM and the NASDAQ. So just keep that in mind going forward this week. And so bottom line here, this is our market maker move low. Our market maker move high is up here. And then I have a channel that outlines last week's market maker move high. So we are slightly inside of potentially in last week's expected low area, just ever so slightly here, suggesting, they do seem to think that we might be putting in a bottom here. It's not like we're having a gap away on the market maker moves. They're still giving that potential in their pricing on the options. So do keep that in mind going forward here. Uh, Ultimately, this consolidation down here has been proven as a major breakout point. Like I said, the monthly 50 could be a major target here in the coming weeks. And remember that this was right around the election day. Also, I have been saying for some time now that I do think that's the ultimate scenario going forward. So, but I am not going to rule out the possibility for a bounce this week. Okay, and technology didn't have nearly as bad a week as some of the other areas in the market. So I do want to float that out. We are at the very bottom of my Andrews pitchfork. Like we saw in the S&Ps, we did look below on the COVID lows, which could be a bear trap. So I do want to float that idea. But so far, we are holding these COVID lows here on the NASDAQ. So keep that in mind going forward. They did not want to seem to break that down today. We do have the weekly 200 below us here. Not too far at all. Hair's breadth away here on the NASDAQ. So some other quick takeaways I want to point out. The election day close, we did manage to take that out Friday there and then save it for the close. And we did take out the election gap from when Biden got elected. So November 3rd of the 2020, we did manage to take all that out Friday. So heads up on that. And we do have a gap above us. So be aware of that scenario as well. And then I also want to float one other thing here. If we were to make a move back down to the market maker moves low for this week as well, that would have us on the 200 weekly moving average here on the NASDAQ. So some other takeaways I got here. We did break away last week here on the IWM, the Russell, away from the top of the pitchfork. And we did a couple of days past the election, we had a gap up on the Russell. We did fill that gap last week. And so that suggests that we might be coming back into this election, November 3rd close scenario, possibly this week. So definitely keep that one on watch. So I don't have the trend line on my chart here, but like I said, the market maker moves low for this week would put us right back to that November 3rd close scenario here on IWM. So definitely keep that one on watch as well to the downside. And I had mentioned in last week's video, in the past, the midline is typically on the channel is typically the support area for a bounce. And so that is another scenario we got to look at here this week, possibly coming down early in the week for a possible rally later on in the week. So as you guys know, I've been really watching the financials and looking for some sort of relative underperformance versus the S&Ps. And even though all the carnage in the markets last week, the green line right here represents the financials. You pull that up, if it'll pull up for me. There you go, XLF. The candlesticks, that's your SPX. So we're still getting fairly relative performance here on the financials, even with last week's carnage. So that still suggests to me that we are in a buy the dip a scenario, the final leg of the bear market, until I start seeing confirmation that we're going to get a weekly underperformance in financials. I'm not getting overly bearish the markets, in my opinion. I think it's very dangerous to load the boat. So heads up on that. What we did see here, guys, if you come down here, and I want to show you here, and I just come over here, click on the thing, XLE, major underperforming last week. So basically, as I mentioned in last week's video, markets tend to stair step lower. So we came down into the start of before last week, the week before, came down with financials, came down with semiconductors, all to an area which, seemed to be fairly supported. And last week we had rotation into the areas that had not participated to the downside, like the XLE. XLE got decimated last week, your energy sector. Okay. And so, that's how bear markets, that's how, bull markets and bear markets work. You rotate from one sector to and you stair step lower. And so just heads up on that. XLU, one of the defensive areas, that's another one that got hit. SMH. Still getting a little bit hit here on SMH, still some relative underperformance on that. So that suggests that the technology's not out of the woods quite yet. So heads up on that going forward this week on the downside. So that was your three worst performing sectors, XLU and XLE, being main leaders on the leaderboard in the markets and taking a little haircut last week. Now, on the bullish side, TLT, believe it or not, TLT caught a bid as yields came in a little bit last week. So heads up on that. And then also we had, let's see here, what's that one there? Let's see if I can get it to pop up. Your NASDAQ had a fairly good overperformance relative to the rest of the market. So I know it was a bad week, but I just want to keep that in mind. Which ones here as of Friday seem to have some relative overperformance here. So, uh, and then we have what's the other one? That's NASDAQ. Let's see, here was another one here. What's that one there? That's NASDAQ. It never fails. Wait a minute here. There we go. IYT. You had to outperform in IYT. And I want to point out also, we had FedEx come out, raise their dividends. Guess who's reporting earnings this week? FedEx. So heads up on that. You had an outperformance in your transports going into this week. A major transport mover, your FedEx, is reporting this week. So heads up on that. Okay. So some really quick takeaways I've got going on here as far as overall trends in the markets. So basically, we are in this digestive area. This is a very strong pattern. I know energy just got decimated last week. I mean, if you look on a weekly basis there, that is one horrible looking candle. But in my opinion, the trend is still intact until we start breaking this down here, this lower level. So in my opinion, they were just taking some froth off the top here on your energy, even though it looks so horrible. So be aware that pattern does still look intact. The bullish pattern is still by the dip, in my opinion. XLV. Now this one here is a different story. XLV is a broken pattern, in my opinion. And so this one here could actually be starting a head and shoulders. Your shoulders, well, shoot, man, you have to come down here. The bottom of your shoulders down here, guys. So this could be starting a much deeper correction, a bearish scenario. So heads up on that on your XLV. Okay, and I mentioned that last week in the video that I was more bearish on XLV than because it looked like an actual pattern change. Another one here, XLP, consumer staples. A lot of fear about uh, consumer sentiment right now is the worst it's ever been, guys. And typically that marks a significant low in any type of market whenever you start seeing sentiment reads at extremes where we're at all-time lows. So just heads up on that. This is a broken pattern. We close the week out really bad here on our XLP. This is your or your left shoulder. This could possibly be a head coming down here, retesting your shoulder line here on the XLP. So heads up on that. XLF, broken pattern as well. Okay, but that it's going with the S&P. It's kind of trading in tandem with the S&P. So I do want to float that idea also. Okay, so just keep this one in mind. This could be a head scenario here. We just broke the top of the neckline, or we're coming in testing the top of the neckline, maybe possibly here for the financials if we were to continue to go lower in the markets. So heads up on that. But yeah, this one here is also, if we could have held up here, then that would have been a strong bullish pattern. But we have actually broken it. So heads up on that going forward here. XLI, your industrials. I don't have that one drawn out, unfortunately. Somehow I missed that drawing it out. But that's a broken uptrend as well. So be aware of that on your industrials. XLY. Somehow I didn't market maker move. Okay, yeah. I didn't put my channels in on this, but just keep an eye on your market maker moves here. Not expect nothing extraneous that in the price action that seems. We do have a gap down here. They are trying to price in a possible gap fill here on the industrials. So be aware of that scenario that we might be coming down testing this gap on our industrials. Like I said, our transports. Um, they have monthly expirations, so I didn't draw out a market maker move on that. But like I said, we are at this here is your current pitchfork you're fighting. The transports are still trading above that. And what concerns me, why would they raise the dividends at FedEx if things were not going fairly well. Maybe it's just they're trying to spoof the market or something like that. It suggests to me that there might be better things going on in the transports than what the markets are currently pricing in. Okay, XLC, uh, it looks like, you know, is this a major head possibly here for Head and Shoulders, and now we're starting the shoulder area? I don't know. So just keep this one on watch here going forward. And XLB, uh, energy, devastated that there. Are we starting left shoulder, head? Are we starting a possible right shoulder here for our materials? Possibly. Keep that one on watch. SMH still had an underperform last week. We did break critical supports last week here on our SMH. And like I said, it was the third weakest area of the market. So I definitely want to keep that one on watch. You see this rocket ship candle right here. This is clearly a potential right down here would be your uh, head and shoulder scenario, with this being your 164 area here, possibly being your support. If this pans out as a head and shoulders, and we are literally starting a bear market, then that could be the case right there. It could just be like I showed you guys with all these Andrews pitchforks. You know, we're right there. It's do or die, this market. I mean, it could be just a bloodbath from here. But I'm leaning to think they're going to come in here and buy the dip next week. Uh, and then I always keep the Jets ETF too, so to keep an eye on the airlines. Okay, this week is about your XHB. That's your home builders index. Okay, we got two major home builders reporting this week. Typically, you will see if the market is topping out, and if things are turning into a bear market, you will see the home builders be one of the most sensitive to the economic climate. Now, we do have basically full employment in our economy right now, so this is going to be a major tell on our economy here, guys. So be aware of the situation. I mean, this is a long-term head. Okay, depending on how you want to draw it. And obviously this should be your neckline down here, and this could be the uh, left shoulder, possibly right shoulder over here, if we are literally starting a bear market, which many pundits seem to think. Honestly, we could very easily just be chopping around for a while to draw it out for much longer here. So heads up on that. That could be this could be the shoulder area. We could cut for quite some time here. Okay, so we have Lennar reporting Tuesday. So I do want to float this idea that it all depends on the backlog, what kind of backlog they're maintaining in this correction in the market. So heads up on that. Higher interest rates, how big of an impact is this going to have on these home builders? So far, the primary bullish trend, they have managed to save this primary bullish trend. I mean, you can definitely make the case that this is a possible buy the dip. So heads up on that. Going to be a major tell on this market. We do have Lazy Boy. I don't really follow this. That is a home investing in your house and home stuff like that. It can give you a little read on things like Home Depot. So heads up on that. Are people investing money into their house? And right now it does seem like they're spending more money on the bare necessities, and they're not buying near as much discretionary stuff. So heads up on that. Lazy Boy's probably going to get hit. We do have Winnebago. I am extremely bearish on this. All-time high gas prices, that is going to be devastating for this entire industry. I have been saying during the COVID run-up in the markets, everybody and their brother are buying campers, RVs. They weren't working. They were working from home, but they were able to work remotely, so they could travel the country and stuff and still get paid to work. And so there's this big glut of all this extra these assets that if and when money starts getting tight, uh, that's a bunch of money out there sitting in the garage or in the shed or whatever that can be liquidated for cash. Okay, and so companies like Winnebago, knowing that all these assets are sitting out there, their their forward sales are likely to get really bad in under this scenario. I think it's currently priced double what it should actually be priced for. I would not be surprised to see $15 a share before the year's out on this one. So heads up on that one. I'm very bearish on that one. KB Home, we are really showing some relative underperformance. They deal with the lower scale houses. Okay, so remember that KB Home, the niche which they go after is under a lot of pressure from the higher gas prices. So be aware of that. They will probably be one of the worst to get hit under the current climate. RAD, that's one of your healthcare providers, Rite Aid. So I don't really know much about the whole industry thing. It does look like we are winding up as a falling wedge scenario here. You can put could very easily break this falling edge wedge. So be aware of that. I wouldn't want to be short this. This is one that I would not short myself, but you never know. Okay. Uh, so just be aware of that scenario. We're near uh, all-time lows here, and in a falling wedge scenario, could break out at any moment on that one to the upside. Uh, Darden restaurants, I think they're going to have a great quarter. People still going out eating out stuff, and they're able to pass on those prices to the customer. FedEx. Uh, so, bottom line is, this is what I said. Look at that amazing week with FedEx, and we have reports. They were reporting Thursday this week. It looks like we're going to start the week breaking out this descending wedge. If FedEx is literally doing something like this, I don't want to be overly bearish this market. So just be aware. Transports lead a bad mark a depression or economic slowdown or whatever. And I do not like seeing FedEx actually potentially breaking to the upside if we're technically in a bear market. Okay, so this is one of my main things that I'm looking at here. I think I think it's way too bearish here in this market. So heads up on that. Okay, another one, CCL. Okay, guys, Carnival. Look at this thing. We've been in a long-term downtrend ever since COVID. And man, it just looks like it is ready. It is ripe to be breaking out of this long-term weekly downtrend here on Carnival, in my opinion. So be aware of that scenario. I mean, I sure as hell would not want to be short this scenario. And CarMax is another one. If the economy, this is one I can't really give you a good read on. I mean, the car lots are fairly empty. The new car lots are fairly empty. Issue which a lot of these used car dealerships, the residual values were so high that they were paying too much for the residual values. The Think of it like the crack spread with the energy sector. The refiners make their money off the difference between the actual price they sell to the gas stations versus the price that they pay for the crude oil. That's your crack spread. Okay. Similar situation with CarMax. You know, the spread that they give you for, they have to pay for residual value and the price that they can sell the vehicle to you for. That's their spread for profits. So they've been in a squeeze scenario because the residual values have been so high. Now all of a sudden the residual values are coming down a little bit. That doesn't necessarily mean that there's plenty of people out there to pay these absorbent prices for these used vehicles. So it's going to be really interesting to see how this is going. And typically, we've been back to full employment for several months now, for the most part. I would think that they're probably still going to have troubles. It, I think they're probably going to have. I personally wouldn't want to be long this scenario. Okay. Next week we got Nike. As far as China goes and stuff, I think they're going to have trouble. Uh, the Asia Pacific area, I think they're going to continue to have trouble. We've got all the Olympics behind us and stuff like that. There's really no catalyst, in my opinion, to maintain the lofty prices which they got going on here. And that is a high price discretionary thing. Like I said, we're moving into a environment where people are assigning value to the bare essentials of life, not necessarily value for these discretionary items. And Nike falls right into that scenario. Okay. FTZ, that is Constellation Brands, they still have holdings in Russia and China. I'm not for sure. Keep an eye. Here in the States, I'm pretty sure. Uh, Remember that their KFC. I hate. They own KFC. I won't go back to KFC. Have you guys seen how they've shrunk down the chicken? They've cut down the sides, just to keep their prices absorbently high. Yeah, $25 and you're getting half the chicken you used to just a few months ago. I'm really disappointed with the model here, Constellation Brands. Personally, I really hope they get a haircut because I like KFC. Okay, we do have Micron next week too. Uh, uh, Micron's really taking a big hit and stuff here. Uh, so we'll just keep this one on watch. It's not looking too healthy here on Micron. You could very easily coming in pretty hard here to complete the pattern. So yeah, it's a broken chart pattern, really looking bad. But that is reporting next week, or not this week, the following week. So WBA, it's another one. Walgreens Boots reporting the following week. TCOM, that is one of your a TripAdvisor. Okay, it's going to give you an idea of how many people are actually out there traveling and stuff. With the whole China shutdown thing, it has impacted some of this travel and leisure stuff going on. So just keep that on watch. And General Mills, and like I said, a lot of money going in for the bare essentials, in life. So just keep this one on. I would be more bullish than bearish on this scenario for your. The only problem you got, the high commodity prices. If we start seeing, uh, uh, how it makes you wonder the high wheat prices. How is that going to impact in the long run? Companies like General Mills, are they going to be able to continue to pass these prices on to the consumer? So just keep that in mind, cereal foods and stuff, high wheat prices are devastating for companies like General Mills. So in the long run, so be aware of that scenario as well. Okay, thanks for watching my video. Please retweet me on Twitter. Uh, so and please write some comments below if you see something that I don't see. Okay, guys. So bottom line is coming into this week, I am personally thinking we are going to get a relief rally in this market, and so we'll see what happens here. And like I said, we'll just have to play it by ear here going forward this week.